there you are. I've been looking for you. Come closer. That's it. Don't be scared. It's just a podcast with me and my good friends. We don't bite much. They made me do it. Honest. Welcome everyone to another True Potential Do More With Your Money podcast. It's Friday the 29th of October, and as you can see, it's Dress Down Friday here, so we've just all come in our usual gear, or maybe that's just me, because in fact it is a Halloween special. We're going to be talking about everything from creepy credit cards to devilish debt, and for that we need some special guests, and of course here they are. Let's meet them. We've got well, she's out of this world. It's Esther Moonstruck McCausland. Was it a small step or a giant leap, Esther, coming on the podcast today?
Small step for man. Oh, I've forgotten it. Oh, that's so annoying. What is it? Giant leap for mankind.
That's the one.
Yes, yes. I should know, seeing as I am an astronaut.
Absolutely. You see, we don't rehearse this. If you wondered, now you know. Let's. If you get on the wrong side of Rayner, you'll regret it. Let's meet him. It's Neil Nightmare Rayner. Hello, Neil.
Hi, Peter.
Oh, that felt good. You're looking very normal for you?
Yes, just late night out last night.
Yes, exactly. You don't want to meet Rayner down a back alley, that's for sure. And he's made a flying visit. Let's meet him. It's George Broomstick Bell. Well, you spoiled my broomstick joke by coming as a man who's been eaten by a shark, but you have pushed the boat out there, George.
Thank you, Peter. I did have another costume, but I swim to work, as you know, Peter.
That's right.
And I was attacked by a shark this morning, so this is the best I could do.
A lone shark?
Just one. Neil saw us on his way back from Elm Street and saved us, but he wouldn't give us a lift. He said, "You're not getting in my Mercedes like that." So the shark gave us a lift, and here we are.
Did anyone actually get funny looks in their car on the way to work this morning?
Yeah, no, I didn't dress like this on the way to work, but
I
was tempted to go to McDonald's for a latte.
Yes.
But yeah, couldn't plug up the courage.
You may not have got out.
Called the police. You've got a reputation.
Tell us, well, you can take your mask off now if you want, just so we can really see. Absolutely, if you want to take that off, because I don't want to look at that for the next hour.
Is that better?
That's much, kind of, yes.
Put it back on.
Describe your dress, if you've got it
Well,
good lengths then.
For people that don't know, this is obviously Freddy Krueger, so, you know, Nightmare on Elm Street, so I thought I'd go all out. Hopefully the mask won't scare too many viewers, but hopefully it's better once I've taken it off.
And George, no animals, no real sharks were killed in the making of that costume, I suppose.
No, I think it's still got hold of us, so I'm hoping to get out later.
Esther, explain your astronautical theme. You're into your astronomy.
I love anything to do with space and the solar system, and I thought, although it's not necessarily scary, my twist is that space is really scary, and like a black hole is really scary, so that's why it's appropriate for Halloween.
Absolutely. Well, we've pushed the boat out, so well done, everyone. I think it looks really good. George, this was a big week on the markets. We had the budget and everything else as well. Facebook, or should I say Meta, has been in the news as well. Is it going to be better with Meta? Well, I suppose we'll find out. But tell us what else has been going on this week.
Yeah, I think the budget's the key thing. I never thought I'd be running through this dressed as this, but I suppose what was the take? The Chancellor set out a case of general improving economic outlook, but he took a series of measures to really maintain momentum in the economy. The optimism was supported by data from the OBR, which was suggesting that economic activity is going to be back at pre-COVID levels by early next year. Economic growth expected to be around 6.5% this year. In March, they thought it would be around 4% and then 6% into next year. So that's coming from a period of negative growth. You've got really strong growth coming through now. Typically target around 2% per annum, so it's a really strong figure. In terms of inflation, you've got a huge amount of demand there. We all know the supply chain challenges which we've experienced in semiconductors and getting fuel to the pumps. He expects the supply chain issues to start to ease into next year. He expects inflation to peak at around 5% levels and then start to moderate through 2022 into 23 towards the top end of sort of expectations, around 3%, that sort of mark. In terms of policy, with growth comes higher revenue forecasts, so more money in. The borrowing requirements are slightly lower. He's introduced a number of spending commitments, so he's increased funds allocated to healthcare, to education, to infrastructure, family support. He's lifting pay freezes in the public sector. Minimum wages for over 23s are up by 59 pence per hour, so at £9.50, and then there's a number of boosts coming through for the younger generation as well. And then in terms of cuts, so fuel duty increases, which he had planned, alcohol duty increases. He took a softer approach to tapering universal credit, so a bit more of a softer approach there. And he's announced a 1 year 50% discount on business rates for retail. So the real winners were probably the hospitality trade, the pub trade, in property companies as well. So if we look at the reaction, not a huge reaction within the market. So the FTSE 250 was relatively flat, but if you get under the bonnet, you see the pubs, you see the property type companies really benefiting there. And also just in terms of the bond markets, you're seeing less borrowing coming through, you're seeing less supply of gilts expected, so demand's greater. Bond yields came in slightly, prices went up. Cable, in terms of the value of sterling, was relatively unchanged on the day. So a lot of news coming through. A lot of this was expected beforehand, so not a huge reaction from the market. Probably the biggest step you saw was within bonds, but overall, pushing for growth and looking to maintain that momentum there.
So kind of took it in their stride this week then.
Yeah.
Not no nightmare on Parliament Street.
You could say that, yeah.
I did say that. Good. All right. Good. Right. So financial horrors. We wanted to talk about that today on the topic of Halloween. So a trick or a treat up your sleeve, maybe over the next 45 minutes or so. Let's talk first of all, if we can, maybe a bit about any sort of financial horrors. Just thinking about our listeners, our audience, clients, the sort of run-of-the-mill things that we might have all had over the years. A bit of, when you get whacked by a bit of credit card debt that you hadn't, or the interest on credit card debt that maybe you hadn't foreseen. What any financial horrors of your own that you want to fess up to early doors today, Neil?
Probably not now as a mature financial advisor, but when I was a student, definitely. As most students are in debt. I think the thing to take away from my early years was, one, don't get into debt, but also as well things like with credit cards. There's a lot of people who've got credit cards who've got high APRs, who are basically just paying off the minimum monthly amount every month, and they're not actually paying off the debt. So it's always good to review that and to have a look at maybe switching it over to a 0% credit card. So when you are actually paying off your monthly amount, you are actually paying off all of the debt, and it's good to review that every 12 to 24 months.
George?
I suppose in what I do, it's the horrors are normally around not having an understanding of the product. So if you're the one directly making a decision or an investment, if you're the fund manager, you've got to understand your product, you've got to have due diligence, understand how's the product put together, how's it expected to perform in different environments. So you've got a full awareness of all the risks and the opportunities in there. So we work with fund managers who have a huge amount of resources dedicated purely on due diligence, modelling and stress testing. And we're not afraid to ask the daft questions of our managers to make sure that everybody around the table fully understands the products which we're investing in on behalf of clients. So understand your product. Yeah.
And I mentioned loan sharks at the start, but I mean it's a point, isn't it? Over the last few years, we've heard a lot about sort of the payday loan crowd, and I know there's a place perhaps from time to time for that kind of service and product possibly, but you've really got to pay attention to the sorts of, as you mentioned, interest and APR and things that you've got to understand really what you're getting into with some of that stuff, haven't you?
Yeah, absolutely. Educating yourself on exactly what you're using, what tools and facilities you're using is really important.
It's a concept a lot of people don't quite understand. I'd struggle, what is, to understand exactly what, there's so many percentages get shoved at you in terms of rates you're going to pay and what it means annualised, what it means month by month. It's a tricky thing to get your head around often.
Well, available options for debt at this moment are incredible, because if you've noticed in the last 2 years under lockdown, there's things come out like easy payment options like Klarna, which will, if you've got, say you want to buy, I don't know, a £90 jumper, it will allow you to pay in stages, but if you don't hit those payments, then you're going to be hit with a massive APR if you don't make those 3 or 4 payments. So it's getting people into potentially a lot of debt, a lot of bad debt as well, for something which you could probably save up in about a month or something like that, or 2 or 3 weeks. So it's really about the education and trying to tell people like saving is the best way forward if you want to buy something, rather than getting it on immediate credit.
Yeah. Esther, any financial worries or horrors that you've had over the years that you want to share with us?
To be honest, I was actually surprised to be asked on this, because I think I've done all of them. And just what Neil was saying, I might be tarring everybody with my brush, but I think it's also generational, because I remember my parents, they would never buy anything unless they had the money, whereas we want everything now. So I would look at that £90 jumper and be like, well, I want that jumper. I don't care what the interest payments are or anything. I want it now because I've got my night out on Saturday. Thankfully, I have matured a little bit because I'm saving for a mortgage, but the store cards and the credit cards, I've been a sucker for.
I think it is a generational thing.
Are you better now though at saving up? Would you, if you saw something you wanted now, would you with the Esther today and the astronaut suit, would you be saving up for it nowadays?
Yes, but I would say that change has actually only occurred in the past 2 years.
Right.
My boyfriend's really tried to rein us in, but I'm just a bit of a nightmare. Like, instead of, say, saving on the ISA, I spent £50 on an astronaut suit that I'll probably never use again. So that's sort of typical me. But now that I'm saving for a mortgage and, trying to have a life while saving, you actually realise how much you waste.
Yeah,
so
absolutely.
Yeah, I am better now.
While we're on the subject of outfits, there's a reason why not just us, but a lot of people in True Potential today are dressed up in outfits for the end of the month, and tell us, for a good cause, a really good cause as well, which you've been involved in. Tell us a bit about that.
Well, I think we've talked about it on the podcast a good few times, but we're really involved with the charity work at True Potential. So this month is we're supporting one of our wealth management partners, Andy Asquith, who ran the London Marathon, I think a couple of weeks ago. Yeah. So he did that for Children with Cancer UK. So it's a charity close to his heart, because his family and family friends are experiencing, the help that children with cancer provide. So we've been raising money all month for him, and we thought we'd cap it off with it being Halloween with a charity fancy dress Halloween day. So.
And what? Tell me some of the outfits that you've seen just in the office so far this morning.
We've got a very scary scarecrow.
Yeah.
I turned around and think, oh yeah, scarecrow, and then it was a shock with actually how scary that is. We've actually got quite a lot of shark themes, so we'll have to have a shark competition later.
Good.
Yes.
Looking forward to that.
So I'm just going to have a drink of blood.
Just a drink of blood, yes. It's quite tasty, actually. It's amazing what you can get in Sainsbury's these days. And other shops as well. There are plenty of other ones out there. Just going back to sort of credit cards then as well. I mean, this issue about trying to, if you like, not buy on store cards and credit cards and maybe save up instead. I understand the difficulty people have perhaps with doing that, because you do want that item now, but obviously saving up will be a better, if you like, way to do it. And of course at True Potential, if you are buying stuff today, buying things online, through our rewards program, you can do that and get the cash back on that as well, aren't you? So you can have the thing and also be saving at the same time. So maybe we've bridged that gap. Tell us a bit about how that works then, Neil. Have you done that?
You have. So the rewards app is through obviously our own True Potential app. So you've got the ability to access, say, ASOS or Currys to purchase your goods. So if you're going to buy a new laptop, you can go in through the app. You can purchase what you want, and then what we will do is, dependent on the offer and dependent on the provider, so Currys, ASOS, Just Eat, that sort of stuff, we will give you that cash back. That cash back is immediately reinvested into your ISA or your general investment account or your pension, wherever you want the money to go. So yes, so if you're going to buy stuff online, why not get money back for it and put it into your
well save up to get it if you need it, do it through a cashback where you're bolstering your savings at the same time. So
I heard of an example on Tuesday. Someone bought a new iPhone and they got £300 back into the ISA, which that's like actually a significant amount, isn't it?
Yes,
so
it is. It's
when you're buying the phone anyway, you may as well.
Yeah. I'm going to go and buy an iPhone after this, Neil.
Yes.
cash that back into my pension. Speaking of cash, I wanted to bring in George on this idea of cash, because that's cash in it. Perhaps it's got a place. You need it as part of your savings and your finances. But cash has its own horror stories as well, especially with inflation. What's inflation now? It's right. I know it's going up, but where are we today?
Yeah. So you sort of way above 3% levels. Yeah. You sort of expected to get up to 5% at the peak, just over 5%. So it's that idea of, okay, if I'm not putting things on credit card, I need to save. Do I leave it in cash? Well, if you've got inflation, which could hit sort of 5% levels, you're actually eroding your spending power. So you're not actually getting a real return. So you need to have, as you say, Peter, you need to have a pot of money for today, but you also need to have money which is actually working for you and invested. So you need to have something which will combat inflation and get you a real return. So investing in sort of multi-asset products like we offer, that's one way of going about achieving that.
Do you think inflation's, if you like, people are hearing more about it now in the news?
Yeah,
As if it's definitely in the last month or two really become more part of the daily, just what you pick up online.
You've been through a cycle of, you've been through the last 10 years of not really having any inflation at all. So inflation tends to be something people thought of as something from the 1970s, where you had those high levels, and then since then it's been fairly moderated. But what you're seeing now is we've been through a period last year of economies locked down, governments intervened, economies were locked down, so companies were having to slash prices to maintain demand. So you saw that environment come through, and then what you see now is price rises come through. Is you've got a lot of demand, which is actually stronger than the supply. So you've got more people waiting for cars than the factories can deliver. You've got more people trying to buy fuel than you've got delivery drivers to get it to the pump. So you're seeing that base effect year on year. If you look at the numbers on a month-on-month basis, you start to see them roll off a little bit. So when we're talking about inflation, it's something which you can rationalise, you understand why it's coming through at this point. Yeah. But the expectation.
And sorry, George, is that because people are spending the money that they've saved during the pandemic? Is that basically what's
that's driving a lot of the demand. So you had high savings levels in the US. Savings levels as a proportion of income were around 20-25%, and they've come down. So you've seen a huge inflush of savings coming back into the market with that demand. But what we're talking about with our managers is, okay, you're seeing high levels of prints of inflation now. How long is this going to stay? And what they're saying is a lot of these factors which are driving higher inflation at this point are because you've got supply chain bottlenecks, and as they start to ease, you'll see demand and supply become more balanced.
Even out again.
Yeah, exactly.
I think it's more evident if you look around, if you go to the supermarkets. I mean, over the past, 3 to 4 months, you've noticed that there's not as much stuff on the shelves. Sainsbury's are having to, as an example, are having to put things on like, please bear with us while we'll get more stock. Everybody's aware of the second-hand car market at the moment, offering extortionate prices for your car because they can't get hold of cars, and there's a microchip shortage, which I think is well documented. So I think the supply is not there, but the demand is greater, which is George has just said, but hopefully that will balance out.
Yeah. Well, 2 weeks ago we were all talking about a petrol crisis, which seems to have. I've not heard about a petrol crisis now since 2 weeks ago. Yeah. So is that should we, I guess, be prepared for more of that, which is short term, if that problem as well, supply catches up with demand? Is that what that was all about?
You probably are we in for more of it? That through to the end of the year, but it's a case of getting supply chains back up to levels, managing demand levels, and just bringing about a bit more balance to the two. One thing that you are still seeing is strong demand, and you're still seeing strong economic growth. So yes, you're seeing inflation prints higher, expecting that to start to moderate. Inflation at sort of more normal levels, so where we're expected to get to, is no bad thing at all. It can be a sign that you are seeing strong growth within an economy. So
but if we're talking about 5%, 4 to 5% inflation, if on your cash savings you may be getting under 1%,
exactly,
probably with a few zeros in front of that one as well. Contrast that with, say, the balanced portfolio we have here, George. What would that have delivered over the last year if we'd put our money into that instead of having it in cash, just to give people a perspective of what the difference is?
Yeah, absolutely. But I'll give you some comparisons of the markets and all of the portfolio. So over the last year, the balanced is up 15.5%. So that's after you've taken off your portfolio charges. Your aggressive would be 24% there. So in terms of combating inflation, you've seen a strong real return in that case.
And even if you go back over, say, the last 4 or 5 years, because obviously last year's been a strange year, let's say that, but certainly over the last 4 or 5 years, you'd be looking at 7% onwards, wouldn't you? For if
on an annualised basis, So year on year, you'd be looking at on an annualised basis, you'd be looking at somewhere around 7%.
So still, even if inflation is now at this, certainly in the last decade or so at a record level, you'd still be beating that by being in an investment. That's
right. I mean, that's a long-term average. So no guarantee of that every year.
Of course.
Compliance in the room. But on an annualised basis, if you look at the return since we launched the portfolio as balanced, on average is averaged around 7%.
I think if you look at the fact that George has just alluded to the percentages of growth which you're getting in those portfolios, coupled with the fact that over the last 2 years people have been predominantly in the UK saving, they've been putting their money away because they've either been based at home, they've had nothing to spend their money on. I know a lot of people have, you know, spent money through Amazon and stuff like that, but generally
On outfits.
on outfits, yeah. But generally the costs have gone down, so you're not spending money on petrol getting to work, you're not going out for your lunch, you know, you're saving all over the place, and that's obviously been in people's bank accounts, which is what we're talking about. It's been in cash, and typically that's not growing. So it's a good opportunity for people to have a look at, you know, investing that money.
Yeah. Do you think it'll make people look at investing who perhaps hadn't invested before? Maybe people have never thought about putting money into investments, just, as I say, put it in the bank or wherever. Do you think the whole, like the last 12 months and where inflation's at, do you think it'll make more people think about investing who perhaps hadn't done it?
Yeah, I hope so, because if you have saved, you know, you could actually save quite a substantial amount.
Yeah.
So rather than just think, oh, right, I can do everything now, I'm going to blow it, hopefully it might make people think that,
Yeah.
you know, it is good to have that cushion, and you can put it in investment and then get some growth out
And you don't
of it.
need hundreds of thousands and millions.
No,
I mean, a few
no.
quid, you know, putting
Yeah,
in 20
exactly.
quid a week or whatever into an investment, if we're getting the kind of returns you're talking about, and it's safe, it's a way, it's beating inflation, there's this myth, isn't there, that if you haven't got hundreds of thousands to invest, it's not for you. It's not
Yeah.
right, is it? It's absolutely not right.
Yeah, but I think as lockdown has put some pretty good habits in place of people saving who weren't saving before, and now they're realising, they're thinking, wow, I've got a couple of thousand in the
Yeah.
bank. Typically I was living from hand to foot every month
Yeah, yeah.
and paying my bills. Now I've paid that off, I've paid the credit card off,
Yeah.
I've got free money to invest.
Yeah. You're a lot more conscious, I think, how much you did spend on.
Yeah.
Say for me, it was eating out. So
Yeah.
whether it was lunch or like going out socialising, when that was took away from you, you realised how much you did spend, but
Yeah.
you've got nothing to show for that, apart from a bit more weight that I put on.
But you're saving up for a mortgage, like you said.
Yes.
You're putting that down for a mortgage, so
Yeah.
that's quite exciting.
It is. So I feel like we've been saving for ages, but the pandemic actually helped us.
Right.
You know, it's one silver lining from it, because you are tempted to go out and you're like, oh, I've been stuck in the house, I want to go out, but we had no option but to save. So it's actually really helped us. So now we're in the position where we're just waiting for a property to come up. But I don't know if this is just my experience. I don't know if it's the property market in general, but I feel like the prices are still quite inflated. Like,
Yes.
because we've been looking for the past 2 years, we've noticed the property prices are a lot higher than they have been. So.
And will you have a telescope in one of those rooms
Yeah.
pointing up towards Jupiter or something? Or?
You know, I did
Yeah.
actually get a telescope. I got a telescope for Christmas a few years ago, and I couldn't work out how to use it. Like, literally, I could not see a lamppost in front of us or anything. So I've actually just put it in the loft. And
Yeah, just took the cap off the
oh,
phone.
I've had that, yeah.
And how is Jupiter at the moment?
Jupiter is really good, yeah, really big. It's, yeah.
What about you? Actually, never mind. You've obviously been spending your savings on a trawler, George. Is that right? Is that where you've been spending your savings? Over the last year?
It's exactly where it's gone.
Yeah. You need to spend some of yours and getting your nails cut. But,
Manicure.
Yeah.
absolutely right. Yeah. But I mean, this investing and one thing I wanted to ask you about, Neil, was compounding. That's the other thing that compound interest. So you put your money into an investment, you get the kind of returns. The magic friend you've got there. Now, I know I'm talking about scary things today, but your hidden friend there is compound growth, isn't it? Explain a bit of that if you
Yeah,
want.
of course. Obviously, about the benefits of investing monthly is that you're compounding that growth.
Yeah.
And what we've just talked about is people have got a lot more money to invest on a monthly basis. You're going to see the benefits of doing that and getting into good habits over the last 2 years of people taking that monthly amount and putting it into an investment is going to see them grow real terms over the next 2, 3, 4 years.
Yeah.
Esther's just a good example of, she's got a target in mind. She wants to save for a mortgage, and she's been regularly investing and putting money aside to get to that goal.
But what about properties and investment? I know that's not what you're doing. This
Yeah.
is for your main house, but where do you think about it? Is that a bad investment, good investment? Where does it stack up?
It depends what you want to do. I mean, if you're going to invest in property for maybe a return on yield on, say, a rental property or stuff like that, it can produce some really good returns. However, as with the portfolios, and George will agree with this, diversification is really good. So making sure you've got an emergency fund, making sure you've got an element maybe in an ISA which is tax efficient, and maybe having a portfolio which could contain some property investment, but making sure it's spread, making sure that if there is a dip in house prices, which it could do, the market is quite high at the moment, so if you were to decide that you wanted to invest in a buy-to-let property and those prices crash, then you could be in negative equity. But it's good financial advice, making sure you've got an emergency fund,
Yeah.
making sure you're not putting all your eggs in one basket,
Yeah.
and making sure you're diversifying your portfolio.
That's the other thing with property investment is you can't get your money out as quick as you might
No,
want
it's
to.
not.
You've
It's
got
not
to
as
wait
liquid
until you've got
as,
to.
you know,
It's
correct.
not as so you've got to
Yeah.
factor
You've always
that
got
in.
that subjectivity of valuation.
Yeah.
You know, what do you base the value of the property on? The one which sold down the street a few years ago.
Yeah.
Well, the market's changed, so trying to get the correct valuation on a regular basis to have a full understanding as to, you know, what is your worth if that is your investment, and of course, you know, getting out of that investment as well. So I would say, you know, think about a balance of. I know a lot of people who are heavily invested in property, but also have a multi-asset portfolio as well, because, you know, one of the things which we are looking for within a multi-asset portfolio is, yes, growth, yes, yields, income, but also the ability for investors to get out of that investment when they need that money.
Yeah. And speaking of another one, I wanted to talk a bit about cryptocurrency, George. And is this just something that is everyone's nightmare, or where do you stand on
I
crypto?
get asked about this quite a lot, and I
wonder why, George. I wonder why people wonder about this.
You know, deemed to be an expert in the area. Is a concept in terms of a way of flowing, a way of transacting. I can understand where the theory comes from, but what the angle I often get asked is from an investment perspective, and the challenge which you've got is the volatility and getting somebody to clearly explain to me the valuation of the asset and why that valuation changes so aggressively on a day-to-day basis. So just to give you some context there, the volatility of Bitcoin is around 82%. If you compare that to a US stock and share, that's around 18%. So you've got a much more volatile asset. If people think about investing in the US stock market as risky, well, you've got a lot more volatility if you're investing in Bitcoin. Also, just in terms of valuation, what are you basing that valuation on? If we look at a company, you can base it on its assets, its earnings, its income stream. Bitcoin seems to be very much driven by sentiment, by crowded positions, because it's popular on social media platforms.
Yeah.
So for investment in a portfolio, I think, you know, it's too volatile, and there's a lack of transparency within.
I think it's fair to say over the past 6 months that's been highlighted about the horror stories of certainly on social media, where a lot of people have been encouraged to buy influencers and stuff like that, and we've seen some horror stories of loss, but it's quite volatile, isn't it? Yeah,
and it, you know, you need to be in a regulated asset. A lot of the volatility which you've seen come through has been pushed by China, who've been opposed to adopting Bitcoin, essentially because they want either their own digital currency, so they've got full awareness and they can manage that a bit more. But yeah, as well as social media's influence on encouraging trading. Yeah.
And for every story there is of people who've made a fortune, there's plenty of others who probably look like some of the guests we had at the very start, like who sat behind us, who will tell a very different story of their experience with crypto as well. Another, if you want to avoid a horror, starting to save early for retirement as well would definitely be, from an advisory point of view, probably one of the things you would say you can never start early enough.
No, definitely not. I'm guilty of that. I didn't really start saving into a pension until I was in probably my late 20s. And, you know, although I've caught up from a provision point of view, from a retirement point of view, you often get the thought, well, if I had to put a little bit away when I was 18 or 19, just a small amount, doesn't matter how much you save, it has a big effect from a compound point of view and also from a growth point of view. So although we say it all the time, you should start early. It really is, you know, a thing to say and to go with, because the more that you put away from an early start, the more that you're going to get a bigger pot on retirement.
And the less you'd have to put away as well to get a reasonable pot at the end. Yeah. I mean, obviously, it's all, everyone will have their own goals and their own aspirations, but I mean, the longer you leave it, the more you've got to make up for lost time, haven't you?
Yeah, and there's also, as the state pension increases, that might not suit you. You might not want to retire at that age. You might want to retire at an early age. So, you know, they're already increasing the retirement age for personal pensions to 57. So, you know, it's always recommended to start early.
Yeah.
And it comes back to compound interest as well. So the theory of compound interest is, on average, because you've got volatility in the market, the expectation is that you can buy on average units at a lower cost. So you're buying the same unit but at a lower cost, so you're getting a better return when you see that rebound. And also starting early, you've got, if you do see volatility in the market, you've got more time to recoup losses as well. So, you've got two advantages there. One, which is a really strong growth potential to allow you to meet your objectives as well, but also benefiting from the compound interest, and if you're doing this on a regular basis.
I mean, it's worth just saying as well, everyone watching this will probably have their own pension, personal pension, or a company pension, or auto enrollment pension, for example. It's worth just looking at how much you're paying in, because you might be paying in, if you like, the statutory limit, the 8%, I think that has to go into might be what's going in, but you might feel that you want to put a bit more in, and it's very easy to do that, isn't it? Very easy to top it up, or either on a one-off through impulse save, or increase that on regular contribution.
I mean, the True Potential app's fantastic for that. If you want to just put in an ad hoc amount, so I've got £500 spare this month, I'm going to whack it into my pension and maybe get some tax relief on that as well. At a press of a button, it's taken from your debit card, and it's almost invested immediately. And then also you can track the goal as well. Which is really good, because if you are, in your mid-20s and you've started when you were 18, you can see that goal, but you can change it. You can change when you want to retire, or like you said, you can change the monthly direct debit amount.
Because you might think, well, I'm paying what I need to pay, what I'm told is right, I'll just stick with that. But you might find you get a pay rise or a bit of bonus or something. You might think, actually, I'll put £10 extra in, and that all, as you say, over 20, 30 years, doing that regularly makes a big difference.
Well, a good point that we said a couple of podcasts ago was the big pension pots that we see, £500,000-600,000, they weren't really from people putting huge lump sums in. They were from people just regularly investing every month.
I think the auto enrollment pension, I know I'm going back to generational, but that's all I really know, is just my experience. I think that's made the younger generation more aware, because obviously you either have to do it or you have to opt out. So it's starting to get in your conscience that you need to start saving. And I think when I was 18, that wasn't anything that I would even remotely have considered. But if you did start little often, I think in my head you've sort of got certain milestones in your life. So I feel like I'm saving for a mortgage, and I need to save potentially for a wedding if anyone wants to ever marry us, and then go from there. But if I'd just started and in the background had been saving for my retirement, it would have been much easier. So that's a lesson learned from
getting people into good habits.
Yeah, definitely.
I was going to ask you then, just as we begin to sort of close off, I was going to ask, what is the kind of one tip, if you like, you would give someone today to avoid a horror? What if you were speaking to somebody, let's say in the pub, telling me, I know you'll be going out dressed like this in the pub tonight. I know you do anyway, not just for this weekend. What would be the kind of one thing, if you were striking up a conversation and someone said, tell me what not to do? There's lots of advice about what I should do. What's the one thing I should not do?
Try not to borrow for the smaller things. Save up first. There are things that you have to borrow for, like a mortgage. You have to save up a deposit, and you have to borrow the rest for your average person. But I would say, try not to borrow for the smaller things. Save up, get into good habits.
For me, probably try not to time the market. Get into a good habit.
Good one.
Understand why you're investing, how long you want to be invested for, when do you want to meet that goal. Invest as regularly as you can. So get into those good habits of putting money into your ISA or your pension, and try not to watch what's happening in the FTSE and time it, because I've seen a lot of horror stories. If you're invested in a multi-asset discretionary managed portfolio, such as the True Potential portfolios, you've got people who are employed to manage that money on your behalf. So try not to time that.
Well, because you'll never time it. You'll always be behind the curve. It's already happened by the time you have noticed that. I'll never miss the opportunity to ask about pound cost averaging. People might read about that in the press, or they might see it online. What does it mean? What is that? It's what you're describing, I guess, but explain it in your own words if you would.
Exactly. So pound cost averaging, similar approach to compounding in that effect. You buy in units at a lower average cost. So essentially what that means, if you think about what you had through 2020, you're buying the same unit, but for a lower cost when the market did sell off. So essentially what you're doing is you're getting a boost on the return as you go through. So it's worth sort of reading up on, because it's a really, really powerful concept. They call it, the nerds call it one of the wonders of the world, because it is such a powerful tool.
If you got into that habit of putting in, £5 a week, or a £1 a day, whatever it might be, £5 a day, whatever, put that in. You're gonna, if you just did that regularly, you're gonna get the ups, you'll get the lows, but on overall, you'll be getting a regular throughput, rather than trying to, as you say, time it, where you just can't ever do that.
Yeah, exactly.
So good. Esther, any tips of what not to do when you're getting in that rocket later on to head off to Jupiter? What are you going to say to your fellow travellers?
I would just say avoid store cards, and then maybe when you balance transfer, don't then back up the. Not that I'm talking from experience, but
Really?
my biggest thing would just be avoid debt, because I think, like Neil said, it is just the small things. Like, a lot of people don't have much to show for it apart from maybe a nice outfit or a holiday, but it's just not sensible in the long run.
Good. Okay. Well, that's been good. I've enjoyed that today, and well done on your outfits as well. Would anyone like a chocolate, by the way, guys? We've been staring at these for the last 45 minutes, so I'm going to have one.
Oh, yeah.
So please do help yourself. What are you doing this weekend? I need to ask this. It's very important that we know, just so we can keep away from you, because you have a very scary outfit there.
I'm actually going to, believe it or not, to a owl sanctuary. But the good thing is I've already got the glove on for the owl, so just gonna rock up like this, Peter.
Can't beat that.
I can't.
Yeah,
I'm best man for my best mate's wedding, which is coming up pretty soon. So I've got quite a bit of planning to do for that, which I'm leaving later and later. So I need to get cracking on that.
Have you written your speech, or is that what you need to do?
I've got the template. I just need to work out what I can get away with, really, and go from there.
I've got one of those to do myself in a few months' time, so mine's a bit complicated.
I might need some tips.
I think I need some tips off you. You go first. Esther, come on, what are you doing this weekend?
I've got a surfing lesson.
Have you?
Yes. So it's my third one.
I made that mistake, Esther.
Yeah.
Don't go to George's school.
Yeah. Yeah, so it's third lesson on Sunday. I think it might be my last in the winter because it's very cold.
Yeah.
I think I'm going to knock it on the head until next summer.
So where do you do that?
Tynemouth. So
right.
we've got like a lovely coast here, and it's actually become really popular during the pandemic. So there's loads of paddleboarding and surfing. So I've fully jumped on the bandwagon.
Jumped on the board.
Yeah. Wagon. Yeah.
And so why did you decide to go?
You know, it is. I just like trying something new, and I've always wanted to do it. I grew up always at the beach, and I don't really know why it's took us to 31 to try it, because I absolutely love it. Like, I spend most of the time swallowing the water and under the waves, but I enjoy it anyway. So.
Can I ask you a question? Most people who are into astronomy, like I know you are,
yes,
are less into astrology and their
yeah.
star signs and
Yeah.
what all this. Do you believe any of that stuff?
I don't actually know. I have to like.
What's your star sign?
I was just about to say I always have to think. I think I was a Virgo, but I think there might have been some change, some
Right.
shifting.
Oh.
I don't know. But no, I don't really follow it or believe it, if I'm honest.
Anyone else? Do you read your horoscope, Neil?
No, I don't.
Horoscope?
Sometimes I do, but I take it with a pinch of salt. But I'm a Virgo, so very critical.
Your horoscope said you were going to be in deep water, and it turned out to be true. Yeah. Okay, that's enough of the bad jokes. And I can feel my makeup running. And somebody just walked past with a pair of horns, which I thought, that's enough. I'm all Halloweened out now. So thank you very much, Esther, George, Neil. Good to see you again. And thank you also for tuning in this week for our Halloween financial horror special. And if you want more of this, wait a year for more of this. But if you want more of our podcasts, you know what to do. Just hit that subscribe button, and we're all there for you. So until the next time, it's bye for now.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.